But there's been a lot of interest around the retail names and whether or not they will be looking to capitalize once FDI in retail is opened up. Sanjiv Goenka of CESC joins in to talk about that. Sanjiv, morning. There's been a lot of excitement about whether or not you're going to choose to do something with Spencer's. But before I ask you what you think, do you think it's likely that this will be an option exercised in Bengal? Because the Trinamool Congress has been quite clear about the fact that they're anti this move. Will Bengal be one of the states, you think, that will open up to FDI in retail?
You know, it's not really for me to say whether Bengal will open up to FDI in retail or not, but I think the nation as a whole has declared a policy. It's a policy that I think is welcome. I think will control inflation. I think will provide employment, particularly to those people who've just about done school education. And it's something that we as a company support.
Morning, Sanjeev. But it's still in the domain of the state governments and whether they choose to allow some of the larger global chains to come and operate in their state. Do you think large global chains will walk in with this kind of uncertainty that they may be allowed to do it in half the states but may not be allowed to do it in the other states? With so much confusion prevailing, do you think you will get investments in easily from the larger companies?
You know, I think at the end of the day, getting investments in modern trade is something that we should all welcome, and I do not believe that all the states will allow it immediately. It will be progressive, it will be phased, and I think it will be step by step. And I think that's the way it will be, and that's the way we should accept it as going to be.
Your investors are quite confident that you will actually try and get a partner in for Spencer's to take care of cash flows for that company. Does it make sense for you to get a strategic investor in now? Have you started discussions with any players?
You know, the truth, Udayan, is that almost every major player is in dialogue with almost every major Indian player. But that is more by way of engaging and assessing. Whether we will eventually get a strategic investor or not remains to be seen. However, what we are open to is investment in the field of back-end, and that is something anyway allowed already. So I think it's an evolving industry, it's an evolving phase, and it's early to really specifically specifically comment with finality on anything. But yes, we are open to discussions, we are open to thoughts. Regarding cash flows, frankly, there's not that much now required. Losses have come down substantially. Sales have been going up smartly. For the month of October, we finished at 1,240 rupees a square foot, which I think is again a very strong increase over the last quarter, where we were at about 1,000 rupees a square foot. So I think sales are going up, losses are going down. Capacity expansion is taking place, and we are a company which is not particularly leveraged. We have minimal debts, so I think we are in a pretty comfortable position.
The observation only, Sanjiv, seems to be that while you do have store level profitability, overall profitability will only be driven once you get scale, and in order to get that scale you need to get a stronger set of hands, let's say financially, to help you diversify a bit more, expand a bit more. On that regard, would you say it seems to make more sense to go with an international entity in order to do that?
Well, I think frankly that assumption is wrong. I think roughly at 80 rupees a square foot, at 16 lakh square feet you break even. We are at 62 rupees EBITDA per square foot, and we are at about 11 lakh square feet. So you're not talking of something very significant. You're talking about 4 lakh square feet, which you're looking at a total investment of about 500 crores. And so you're not talking of anything significant anymore. So I do not believe that we're talking of huge numbers in terms of investment to get to break even. We are pretty much getting there. Having said that, examining a partnership with a strategic player in the back end is something that we are open to considering.
Just want to bounce off this last bit of the clause, which concession clause, if I should call it, 30% sourcing from small SMEs in India. Is it a viable option to work with?
You know, I do believe that when you have something like FDI and multi-brand retail, these are clauses that will be there initially. But over a period of time, as the SME sector feels it is not threatened, these clauses will get diluted and eased.
How is your core power business doing now, Sanjiv? Because we've heard so many...
The core power business is doing reasonably well.
Go ahead.
Our expansions are very much on track. We lifted the boiler drum for our Chandrapur project on the 18th of October, which I think is a milestone, and we are very much on track to commission it on 31st of March 2013. The progress with our Haldia project is actually moving on fine. As far as the Orissa project is concerned, which is a 1320 megawatt in the first phase, we are number 1 out of 18 power projects in the CEA list for coal linkage. I think everything else is obtained. We are awaiting the Standing Linkage Committee of the Ministry of Coal to meet and then move ahead with the fuel linkage. As far as the Jharkhand project is concerned, we have received the no objection certificate for bulk of the land. The coal mine is in place. The terms of preference for the environment clearance are in place. So I think the water is in place. So I think we're pretty much set. We have land for another major project in Balaghar in West Bengal. And we've got a terms of reference from the Environment Ministry. I think what we've applied for is the fuel linkage.
By the way, as we speak, a meeting is currently underway between Sonia Gandhi, Pranab Mukherjee, the Finance Minister, and Pawan Kumar Bansal, the Minister for Parliamentary Affairs. So hopefully the Logjam will be ended today with regards to FDI and retail, and some of those stocks have been holding up. Sanjiv, what would you say is a reasonable assumption to make going into next year on the merchant rates front? Because that's been quite volatile this year in terms of where merchant rates have been trading at.
You know, I think with the coal position being what it is, you can expect merchant rates to be slightly higher than where they are today. I think the government of India has to act on coal. There is a major problem. Coal prices have gone up very, very dramatically. And I think the availability of coal itself is in question. And I think this is something that, frankly, the whole sector needs to address unitedly. And I think all of us need to sort of come together and urge the government to take very fast and very strong action to make sure that availability and pricing of coal is competitive.
Good luck, Sanjiv. Thanks very much for taking time out today. That's CESC welcoming FDI and retail as they would. Stocks up 3% today at 250.